What if I told you there's a rising AI company that could challenge Palantir's dominance by 2025? Could it be the next big thing in enterprise AI, or is it just another overhyped stock? Stick around because today we're digging into C3.ai and whether it has what it takes to be the Palantir of the future.
Hi.
In today's video, we're going to explore C3.ai, its partnerships, competitive edge, and whether it's a smart investment for 2025. Thank you for watching, and please subscribe to my channel, TheFinanceSavvy, for more updates and insights. Got questions about AI stocks or investing? Feel free to reach out. Let's dive into the video. Is C3ai the next Palantir? Let's find out. Palantir had a blockbuster year in 2024, soaring by an astonishing 350% and claiming the title of the top-performing stock in the S&P 500. It's become a household name in the AI-powered enterprise software space, thanks to its cutting-edge tools and government contracts. But there's another player in town that's making waves, C3ai. While not as flashy as Palantir just yet, this smaller company is quietly gaining ground with its unique strategy and rapid growth. The big question is, could C3ai emerge as the Palantir of 2025? What makes C3ai special? Partnerships that matter. To understand C3ai's potential, let's talk partnerships, because in enterprise software, alliances are everything. Over 60% of C3ai's deals in its last quarter came through its partner ecosystem, and these aren't small-time partnerships. C3ai is working with Microsoft, Amazon, and Alphabet to integrate its AI solutions into their massive cloud ecosystems. It's also teamed up with top consulting firms like Booz Allen Hamilton and Capgemini to break into niche markets like aerospace, defense, manufacturing, and energy. Here's where it gets exciting. These partnerships allow C3ai to punch above its weight. By leveraging the networks and expertise of these tech giants, C3ai can access lucrative contracts without shouldering the full burden of sales and development. In fact, nearly 50% of C3ai's recent deals came from aerospace and defense, a hotbed of innovation and big spending. Another 30% came from industries like manufacturing and life sciences, showing that its AI solutions have wide-ranging applications. How does C3ai compare to Palantir? If we zoom out, the parallels between C3ai and Palantir are striking. Both focus on enterprise AI, both cater to high-stakes industries like defense and manufacturing, and both have seen accelerated growth in recent years. Here's the kicker. C3ai's revenue growth rate is now nearly identical to Palantir's. But despite this impressive performance, C3ai's stock isn't flying as high as you'd expect.
Why?
It comes down to one word: profitability. The profitability gap. Why Palantir has the edge. Palantir has crossed the profitability threshold, which gives it an edge in the eyes of investors. But let's not get carried away. Palantir's profits are still modest. It's trading at a sky-high price-to-earnings ratio of nearly 400, making it one of the most expensive AI stocks on the market. On the other hand, C3ai is still in its growth phase, burning through cash as it scales. While its revenue is accelerating and losses are narrowing, it's not expected to turn a consistent profit for at least a couple more years. This creates a huge valuation gap. Palantir's market cap has surged, while C3ai's valuation is significantly more modest. For value-focused investors, this might make C3ai an intriguing underdog to watch. Why C3ai's growth strategy stands out. C3ai's growth strategy hinges on its partnership model, which is paying off in a big way. By aligning itself with cloud giants and consulting firms, it's rapidly expanding its market reach without overspending. Over the past year, the company has nearly tripled its revenue growth rate, an impressive feat in such a competitive industry. But here's the thing, until it reaches profitability, it's a riskier bet compared to Palantir. The risks of investing in C3ai. Let's talk about risks because every investment has them. While C3ai is showing strong momentum, it's still an early-stage company operating in a highly competitive space. Its partnerships with Microsoft and Amazon are promising, but those same companies could easily become competitors. Plus, the AI software industry is evolving rapidly. To stand out, C3ai will need to maintain its technological edge while managing costs and building a loyal customer base. That's a tall order. Is C3ai a buy for 2025? So, is C3ai the Palantir of 2025? Maybe, but it's not a sure thing. For investors with a high risk tolerance, C3ai offers plenty of upside potential. The company is growing quickly, forming strategic alliances, and carving out a niche in enterprise AI. But keep this in mind, Palantir has already proven it can deliver profits, while C3ai is still in the proving phase. If you're considering an investment, think of C3ai as a speculative play. It could pay off big in a few years, but there's also a chance it might fall short. For now, I'd recommend starting with a small position if you're interested in this stock. Keep an eye on its financials and its ability to scale profitably. Remember, in the fast-moving world of AI, today's underdog can quickly become tomorrow's breakout star. Is C3ai the next big thing in artificial intelligence, or is it just an overhyped stock on the verge of crashing? Today, we're diving into one of the most talked about AI companies, C3ai. What's behind the buzz, and should you jump in or steer clear? Stick around to find out.
Hi.
In today's video, we're going to explore whether C3ai symbol AI is worth your attention or your investment dollars. Thank you for watching, and please subscribe to my channel, TheFinanceSavvy, for more updates and insights into the world of finance, investing, and technology. Got questions? Feel free to drop them in the comments. All right, let's dive in. 1. The C3ai Buzz. C3ai has been making waves in the world of artificial intelligence. With its stock gaining attention from both investors and analysts, the big question is this company the real deal, or is it just another speculative play in a frothy AI market? Let's break it down. Over the past month, C3ai's stock has dropped about 11.4%, significantly underperforming the broader market and even its industry peers. That's a pretty sharp pullback, especially for a company in a high-growth field like AI. So, what's going on here? Is this a sign of trouble or an opportunity to buy into a company with long-term potential? Well, like every good investing story, the answer isn't straightforward. Let's look at the fundamentals, starting with earnings estimates. 2. What's driving the stock? At the heart of any company's valuation is its earnings potential. And for C3ai, the numbers are a bit of a mixed bag. For the current quarter, analysts expect the company to post a loss of 25 cents per share, which is a massive drop, down 92.3% compared to the same quarter last year. That's not exactly encouraging, is it? But here's the twist. C3ai has a history of surprising Wall Street. In the last reported quarter, the company delivered earnings that were 62.5% better than expected. Revenue was also up 28.8% year over year, beating estimates by 3.66%. So, while the company is bleeding cash, it's showing signs of momentum. The question is whether that momentum is sustainable. 3. Revenue growth, a bright spot. Now here's where things get interesting. Revenue growth is one of the strongest indicators of a company's health, and C3ai is performing well in this area. Analysts are projecting revenue to grow 29.6% this fiscal year and 23.4% the next. These are solid numbers, especially for a company still trying to carve out its niche in the competitive enterprise AI space. But there's a catch. Even with impressive revenue growth, the company isn't profitable yet. And in today's high-interest rate environment, investors are less forgiving of unprofitable growth companies. This is a big reason why C3ai stock has struggled lately. 4. Competitive landscape. Can C3ai stand out? Competition in the AI industry is fierce. Giants like Microsoft, Amazon, and Alphabet have deep pockets and established relationships with enterprise customers. So where does C3ai fit in? One of C3ai's strengths is its strategic partnerships. The company has aligned itself with major cloud providers like Microsoft and Amazon, as well as consulting firms like Booz Allen Hamilton. These partnerships give C3ai access to a broader range of industries, from aerospace and defense to life sciences and manufacturing. Nearly half of its new business comes from aerospace and defense, which is a promising sector given the rising demand for AI-driven solutions. 5. Valuation, the elephant in the room. Now let's talk valuation. Here's the uncomfortable truth. C3ai is expensive. The stock is rated F on valuation metrics by Zacks, which means it's trading at a premium compared to its peers. But if you're a growth investor, this might not scare you. After all, Palantir, a similar AI-focused company, has a sky-high valuation and has still managed to rally over 350% in the past year. The key difference? Palantir is profitable, while C3ai is not. That's a big deal. Investors want to see a clear path to profitability, and until C3ai delivers, its valuation could remain a point of concern. 6. Risks and opportunities. So, where does this leave us? C3ai is a high-risk, high-reward stock. On one hand, the company has strong revenue growth, strategic partnerships, and a foothold in key industries. On the other hand, it's unprofitable, faces stiff competition, and carries a high valuation. For long-term investors with a high risk tolerance, C3ai might be worth a small position in your portfolio. But if you're looking for safer bets, it's probably best to wait until the company shows clearer signs of profitability. Again, thanks for watching. If you found this video helpful, don't forget to like, share, and subscribe to The Finance Savvy for more insights into investing, finance, and the world of tech. Got questions or want to share your thoughts on C3ai? Drop a comment below. I'd love to hear from you. Until next time, happy investing.